In the last video, we talked about the bigger picture, why global uncertainty does not automatically mean Dubai is in trouble, and why the fundamentals of the city still remain strong. But now we need to talk about something even more important, opportunity. Because whenever markets become uncertain, something interesting usually happens. Some investors panic, some investors freeze, and a small group of investors prepared. And historically, the investors who prepare during uncertainty are usually the ones who benefit the most once the market stabilizes again. Now, before we talk about opportunity, we need to understand how real estate markets actually behave during uncertain periods, because many people imagine something dramatic. They imagine that prices suddenly collapse overnight and everything becomes cheap. But in reality, that is rarely how property markets work. Real estate moves much slower than stock markets. Prices usually adjust gradually, and very often the first thing that changes is not price, it is a sentiment. Buyers becomes more cautious, investors take more time making decisions, transactions volumes slow down, but the actual price adjustments take longer. And that is where understanding market structure becomes very important. One thing I have observed when studying previous cycles in Dubai is that developers rarely reduce prices aggressively. Instead of cutting prices directly, developers usually protect their pricing and adjust the terms. For example, they might offer better payment plans, they might extend post handover payment plan, they might offer incentives like Dubai Land Department fees completely waiving off, or they might introduce flexible installment structures. All of these things improve the overall value for buyers without officially lowering the headline price. So, if you are looking at off-plan property directly from the developers, the real negotiation often happens in the structure of the deal rather than the listed price. But when it comes to actual price discounts, those usually appear in a different place. We call it secondary market. This is where individual property owners are selling their units, and this is where you sometimes see real opportunities, because individual sellers have different situations. Some people may have bought property expecting to flip them quickly. Some people have stretched their finances too aggressively. Some investors may simply want to exit earlier than planned. And during periods of uncertainty, these sellers sometimes become even more flexible. But this is also where investors need to be careful, because not every discounted property is a good investment. Sometimes a property looks cheap simply because it was overpriced from the beginning. Sometimes the building has high service charges that reduce rental returns. Sometimes the location has too much future supply coming, like Arjan, JVC, or even Dubai South areas, and sometimes the developer behind the project is not strong. So, buying simply because something looks discounted can be risky for you. The key is to focus on quality first, strong developers, strong locations, buildings with real tenant demand, and properties that will still be desirable after 5 or even 10 years from now. Because when the market eventually stabilizes again, quality assets are usually the first one to recover the faster. Now, let's talk about where investors should focus their attention. One of the most important concepts in Dubai real estate is something called micro markets. Dubai is not one market. There are dozens of smaller markets inside one city. Downtown behaves differently from Dubai Marina. Dubai Hills behaves differently from Jumeirah Village Circle. Palm Jumeirah behaves differently from newer emerging communities. Each area has its own supply pipeline, demand drivers, and price dynamics. So, instead of asking, is Dubai up or down, investors should be asking a much more specific question: what is happening in this exact micro markets like Arjan, JVC, Dubai Hills Estate, Palm Jumeirah, Marina, Downtown? How much supply is coming to these locations? What type of tenants live here? Who is buying in this area? And what infrastructure is developing around it. That level of analysis is what separates serious investors from people who are simply following the headlines. Now, another topic many investors ask about is rental yield. You often see advertisements talking about 7, 8, 9, 10%, but it is important to understand that these numbers are usually gross yields. Gross yield means before expenses, once you minus service charges, maintenance, management cost, and potential vacancy period, the net return can look different. That does not mean Dubai rental yields are weak. In fact, compared to many major cities globally, Dubai still offers very competitive rental returns. But investors should always calculate net yield rather than just looking at headline numbers, because understanding the real number is what protects your investment, your capital. Now, here is another important mindset shift. Some investors spend too much time trying to perfectly time the market. They want to buy at the absolute lowest point, but in reality, predicting the exact bottom of a market is extremely difficult. What matters more is buying the right assets at a reasonable price and holding it long enough for the fundamentals to play out. Dubai's population continues to grow. The city continues to attract international talent. Infrastructure projects continue expanding. Tourism continues increasing, and all of these factors contribute to long-term demand for real estate. So, the goal is not to predict the exact moment of the market moves. The goal is to position yourself correctly before the next phase of growth comes in. Now, let me say something important to investors who already own property in Dubai. If you own a strong asset in a good location and your finances are stable, this is usually not the time to panic. Selling during periods of uncertainty often means selling into weaker sentiment, and historically market tends to recover once uncertainty fades. But if you are an investor with capital ready to deploy, moments like this can be very interesting, because sometimes quality properties become available at most attractive prices, and when that happens, the window of opportunity usually does not stay open for very long. Good deals in Dubai tend to move quickly. Serious investors already have their criteria ready. They know the areas they are targeting. They understand the numbers, and when the right opportunity appears, they move quickly. That preparation is what makes the difference. So, the key takeaway from this entire discussion is very simple. Dubai is not a risk-free market. No real estate market in the world is, but Dubai remains one of the most dynamic real estate markets globally, and it rewards investors who approach it with discipline, research, and long-term thinking. Not fear, not hype, not emotional decisions, just pure strategy, because market don't reward the loudest opinions, they reward the most prepared investors. And if you are looking at Dubai real estate today, the real question is not whether uncertainty exists. The real question is whether you are prepared to recognize opportunity out of all these flames when it appears. As we have come down to the last part of the video, I have pinned down the calendar in the description. Just book the slot. Let's discuss what could be the best possible investment or the opportunities for you. Let's discuss one-on-one. Thank you so much.